Oh yeah, what's good, y'all? It's your boy Just Smart here with a very informative, high energy video. So I've been listening to y'all what y'all been saying. Y'all said I don't bring enough energy to the video. I'm kind of boring. So we gonna up it up a little bit, you know what I'm saying? I'm gonna give y'all some more energy. I'm gonna make this a little more exciting for y'all. And we gonna have a good time. So let's get right into it. So today, as you can tell by the title, we're going to be focused on a strategy. So basically, what this strategy is, it's a confirmation checklist. So basically, this confirmation checklist is going to be your guide. So it's a set of rules that you're going to follow, and at least, I want to say at least 4 of these rules have to be valid for you to enter in the trade. This strategy will help you stay very consistent with your trades for the most part. And with this strategy, you'll be able to lose more than you win, and you'll still be able to make money because we minimize our losses and maximize our gains due to our risk reward ratio. So without further ado, let's just get right into it. All right, so here it is. This right here is the sauce. This right here is what you need to be consistent and profitable. Simple. I try to keep it very simple, and I'm gonna even break down each one of these as we go through them. So don't worry. Pause the video. Take note of all these. Throw them in your notes on your phone. You got a computer. Put them somewhere on your computer. I have mine in a Word document. Got an iPad you trade on too? Put it on your iPad, laptop, whatever. You need this list. Write it down if you have to. Very important. So, our first confirmation before entering the trade is we want to see a double top or double bottom pattern forming. So on the higher time frames, we usually want to look for a double bottom or double top for a reversal. It can also be a continuation, but I find that it's more for reversals, where it's more effective for reversals. For lower time frames, you want to see that double top or double bottom for continuation. So let's get right into an example. So right now we're on the Australian dollar, Canadian dollar pair. So this right here would be a perfect example. Let me mark it out for y'all real quick. Right there is a double top. So if we go to our replay, I'm trying to tell you, this replay is going to help y'all out so much because on the weekends, all I do is practice. I go to a random point at a random pair and I trade it for an hour. Just 1 hour is all you need. So I definitely recommend doing that. So we go right here. And this is what we see. This is a perfect example. So we're going to use this right here. This is a double top on the lower time frame. As you can see, the trend is down. So we look for a double top or double bottom for continuation on the lower time frames. So we see a double top form. That means we're going to continue our downtrend on the 15-minute chart. Perfect example. Very simple. That's all a double top is. Comes up, retraces down a little bit, comes back up, goes right back down. Bullish or bearish engulfing candles, lower and higher time frames. So what a bullish or bearish engulfing candle is this candle right here. This candle engulfs or is bigger than these past 1, 2, 3, 4, 5 candles in the upward direction. That is a bearish engulfing candle because price is currently going down, and bearish means sell or it's moving in the downward direction. So that's all a engulfing candle is. It's a very large candle that engulfs or is bigger than previous candles. Our next one is going to be price retracing to the 38.2 level if in an up or downtrend. So basically what this is our Fibonacci retracement. Now, our Fibonacci retracement is very important. I did not make a video on that. I will definitely make a video on that soon. But basically what our Fibonacci retracement is, you want to click on it. You want to find a high, click. You want to find a low. This is our low. And this is beautiful. Like, this honestly was not planned, and like I'm excited on how perfect this is working out. So as you can see, it's in a downtrend, and price retraces all the way back up to the 38.2 level. Makes a double top. This is a perfect sell right here. This is a perfect example of a sell that you should take. So Fibonacci retracement, if you want to find it, it's in this little category right here. Like I said, if it's going down, you want to mark your high first, then your low. If it's going up, then you want to mark your low first and then go up. So that's basically all of this for the Fibonacci retracement. We want to do the 38.2 level for continuation, and you want to do rejection of the 61.8 level for reversal. So if price were to come all the way up to the 618 level and bounce off of that, that means the trend is weak. So it has retraced up more than 50% of the down movement, which basically means that it's a weak trend. And if it rejects this level, if it were to form a double bottom at this level, then that means we would place a buy instead of the double top for a sell. Very simple, very simple. And if you have more questions about that, like I said, I will be making a more in-depth, detailed video on Fibonacci retracements, probably right after this video. So next thing, we want our risk reward ratio to be a 1 to 2 or 1 to 3 at least. If you can do more, that's perfect. But you definitely want to double the amount of money that you're risking, because at that point, what's the point of trading? So say you're trading a 1-to-1, which basically means whatever your risk is going to be your reward. So if I risk $50, I'm going to get $50. If I have a bad month where I'm only profiting off of, let's just say 40% of my trades, I'm losing money. But if I have a 1 to 2 risk reward ratio, I'm doubling the amount that I risk. So if I won a trade with a 1 to 2 risk reward ratio, for example, it would take me 2 trades to break even for my profits. So I want to trade $50 risk, $100 reward. I just want $100. Next trade I take, I risk $50 and I lose it. I'm still up $50 because I just won the last trade and doubled what I risked. I lose another trade. Now I'm back to where I started, break even. So you definitely want to at least double the amount that you're risking, because then that kind of puts the odds in your favor. So I could have a month where I get a 40% accuracy on all my trades, but I'll still make money because I'm doubling what I'm losing. And then you want to risk 2 to 5% of your total account. Sometimes you can do more, sometimes I go up to 10%, but you definitely only want to risk 2 to 5%, because say you go on a losing streak. If you're only risking 2 to 5%, let's just say you're going all out and you're doing 5%. It's going to take a lot of trades for you to actually lose money. And if you don't know how to calculate your risk before entering in a trade, I do have a video for that. I will put that video in my bio for y'all to go look at, to calculate your risk before you enter a trade, because you should definitely be doing that. So next thing we have is the blue over red EMAs. Blue over red means long, and then red over blue means short. So I should definitely update this because I have a single moving average, and basically red means sell and green means buy. So as you can see here, it's red. So that means the red is over the blue, which means sell. Red means sell, green means buy. So look, we already have a double top that formed. We have a bearish engulfing candle. Price did retrace to the 38.2 level. We're going to set up the trade so that it is at least double what we're risking, and we'll get into that very shortly. Also, red over blue EMAs. The EMA is red at the moment, which means sell. And the next step is going to be rejection of support or resistance. So right now, let's just mark it real quick. Let's get some bullet points going. Boom. That's one right there. We definitely got that one in the bag. We got this one in the bag. So we're already going to enter in the trade. We don't even need the last one, but we're still going to go over that one anyway. Just so y'all have an idea what's going on. So rejection of support and resistance is going to be our next one. So let's get into that. There's a rejection of resistance. So this right here is our resistance. As you can see, in this zone right here, price comes down, rejects that zone because it comes up, comes back down, rejects that zone again because it comes back up, comes down again, forms this candle right here with a very long wick, which means price was all the way down here at one point, but ended up coming all the way back up and closing at the bottom of this, and it rejected it, as you see. So now price has gone under it, and it is now rejecting this zone because you see that double top forming, starting to push down. So that is going to be our rejection of resistance to support. That is also valid, so we have that checked off. Now, before you enter in your trade, you must plan your risk management, your stop loss area, your take profit area, and if you want to go long or short, if you want to buy or sell. So now we're going to do that and figure that out, as well as our risk reward ratio. So we're here reviewing the chart. We want to enter in. We want to enter in right here. We're going to go to our short position. We're going to plan our trade. So we definitely want to go here. We want to put our stop loss above, and we want to do at least a 2. So we want to go back to previous price. And we see that price comes all the way down here at one point. We want at least a 2.0. So I feel like right here would be a good point. Stop loss here. It's at least a 2. So we're going to double the amount that we risk. Depending on your account size, the amount that you're risking is going to be different for every person. So we can't quite calculate that. And now all we have to do is let the trade rock and see what happens. So let's get right into that. As you can see, we're doing pretty good. Price is dropping, comes back up, retraces, a little retest. And this is the 15-minute, so it might take a little bit for us to see some results. And boom, just like that, we're in the green. Trade is closed. We doubled our money. And it's really that simple. So if you follow these rules and stay consistent with these rules and make sure at least 4 of the 5 of these bulleted ones are valid, you're more than likely every time going to profit off of your trade. That's honestly all I have for the video. You definitely want to take this checklist down, refer to this video if you have any questions about any of these bullet points. And like I said, a video on the Fibonacci Retracement will be coming out very soon. Appreciate y'all taking the time to watch this video. Definitely check out my other previous videos if you have not yet on how to get started no experience with Forex. Y'all have a good day. It's 1:47 p.m. where I'm at right now. It's Friday. I'm off work. It's a good day. Was feeling good about myself. Feeling good today. Wanted to make y'all a video, and here we are. Here's the video. So y'all enjoy the rest of y'all day, night, whatever time it is when you're watching this video. Do not forget to like and subscribe because we got content coming out every week. Quality, 100% free content. You can't beat that. And you see the results. You see the results. I does this. Peace out.